What's up, guys? I just wanted to get on here and record a little kind of like freestyle, I guess you could say, kind of video. Um, just like tracking liquidity, right? Getting a little better understanding of liquidity. Maybe trying to build a more confident and strong bias. So essentially, we're just trying to go day by day, identify where liquidity is, where price could be heading for the day, and all that good stuff, right? So I've used the replay tool, so we'll kind of go through a week's worth of price action here. But yeah, cool. So we'll get a start on this. So I've had it stopped on Friday, the 26th of April, which is last week's Friday. Just right away, we'll mark out some stuff from the higher time frames. We'll start here on the daily, no problem. Mark out some stuff we've taken. Make this black. Okay, so big sell-off occurred in April. All right, grabbing liquidity at the lows here. Okay, and also stabbing below this low to the left. So anybody buying within this whole area the last couple weeks slash month, whatever it was, even from December, they're going to be getting liquidated below this low. Okay, and what do we see below that as an add confluence? This area being a liquidity block. Okay, and you can even see how we wick right into this daily imbalance here, and then we've gone bullish ever since for the last couple weeks. Yeah, for the last couple weeks. So hop here on the 4 hour. Been moving bullish here. Okay, starting to leave some low liquidity at the lows. Okay, which is no problem. Going to be a future target for sure. We'll go even on to the hourly here, identify what's been going on. So, end of last week, this was Friday, we end up, or actually, you know what? We'll even go from Thursday, the 25th. Look how we grab this liquidity from the left, all right? Stab into this liquidity block area, okay? This wick being Thursday, New York, which comes off the back of a nice sell-off. And what happens? We come down to the low and look at that. We respect the low. Okay. That right there is a hint. Okay. We built liquidity at the lows here. So what we can even do is we'll even turn this to red for you guys. So it'll tell us that since we've respected it, moved away, we now have liquidity down there. Okay. So from there, we go bullish back to the highs, respect the high for a little bit, engineer more liquidity, and then stab even further into this liquidity block here. Okay. No problem. And then from there, we sell off. Now, since we've just respected this high to the left and we didn't take it out, what does that now tell me? Liquidity up here. Okay. So same concept. We'll just turn this to red to make it a little easier for you guys. That we now have liquidity at the highs there. Okay. You can get rid of that. So off the back of that sell-off, going to the 15. Some simple stuff here. Okay. Again, look at the equal lows we've left from Wednesday and Thursday. Okay, so look how Wednesday and Thursday built liquidity for Friday to hunt. Okay. And that comes off the back of news. So you can see here this big wick, 8:30 a.m. in New York Friday, stabs up. And where do we stab into? Look how the market simply takes a previous low here. Okay. And then remember, this is coming off the back of running that liquidity from the left-hand side, okay? We get that sell-off. And now this is approaching New York. Look at the time, 5:30, so a couple hours before. Now we start building liquidity for news. Come up, print a high, sell off, taking out previous low, okay? Return back to the highs, and then sell off again. What does that now tell me? Liquidity above this high, okay? Perfect. And then look what ends up happening. We sell off further, coming into news. Then we start going bullish. News spikes up, grabs that liquidity that was left there on purpose, okay? Mitigates this imbalance up here, and boom, sell off, okay? So how can we be involved in this? Let's check the 1 minute real quick and see if there was an imbalance of some sort that we could have taken an entry off of. Wow, this would have been an entry right here, okay? Anywhere above that blue line. So the blue box is kind of bang on with it. Anywhere in that blue box, or like we've spoken about in the past, when that liquidity is taken, and I probably would have just covered the next high being here, all right, something like that. Or if you wanted to be a little more precise, we wait till we come into this blue box area, essentially anywhere above that liquidity, right? So I'd just probably do this. You want to leave some breathing room for your stop, of course. Now, where can we target? Remember the lows that we purposely left Thursday and Friday. Boom. Okay, so simple stuff there. Grab that liquidity that was engineered pre-news, and then news fuels us for that move to the downside. Okay, cool. So we'll head back to the 15 now, and let's try and frame out what's going to be happening on Monday. Okay, so since we've taken out these lows, what has now happened? Well, taking out these guys, taking out these lows here tells me we've had BOS to the downside for retail. Okay, here, so they're going to be interested in selling these areas here, maybe at the high. So any reactions up here, we can anticipate, okay, and expect, but it's just going to be false, okay? And we're going to be engineering liquidity to the upside. Again, that is not going to be how we trade, right? Anything within these areas here are going to be low probability sells, all right? So these are things that we just want to anticipate. We just had a big sell-off, okay? Now, if you ask me, I don't have any liquidity on my chart right now other than this high, but we need to engineer liquidity in order for us to push up there. Okay, as of right now, we have nothing in these areas, right? Nothing here, nothing up here, maybe this whole big wick. So these are areas that maybe we can respect that'll allow us to push up to this red line 107,566. Okay, so let's continue on with price action here. This is now coming into market open. Okay, so late Sunday night, which is Asia session for me. Okay, so I wanted to push over to when I start trading, which is New York. So we'll stop at half an hour before. It makes the most sense to me. Okay, so I'm hopping on the chart right now, and I want to just be identifying where liquidity is. Okay, so get rid of this now. Look how the market has now come up, respected this high. Okay, and moved away. Okay, that's the important thing here. We respected the high, which is good. Now we've engineered liquidity up there, and then moved away. Perfect. Now we are now starting to build that reasoning to push up above this wick area. Okay, as we know, any reactions from and in this area are just gonna be a trap. Okay, perfect. So we sell off, come down to this low here, and look at that. We respect it. This is 3 hours before New York Open. We respect it and move away. Cool. So now we have built liquidity here as well. Go to the 5-minute. Just because now we're approaching New York, so I want to just get a little more refined. And what do we got here? Market has printed a high, okay, before we ended up respecting the low. So when market printed this high, sold off, taking a previous low. Structurally speaking, we now have liquidity above this high, not only above this high, but we're going to have liquidity above here. Okay, why? Even on a small scale, same thing still applies here. Look how we have a previous low, okay, big sell-off, taking out this low from the left-hand side as well, coming up, and we respected that structure, okay, that retail building liquidity, okay, whether you want to see it as a trend line, which you could, like this, or just seeing it as a smart money trap, whatever it is, we've respected it, moved away, taken another low out, so now we know we have liquidity above these highs and above this high. So I marked it out like this, perfect. Let's see what happens here. Market comes down, takes out this low. Okay, what does that now tell me? This is going to be a trap. We're not trading from this. Okay, if we do respect it and move away, that's no trade for us. And look at that. We respect it and move away. That is no trade for us. Perfect. Don't forget, what did London do? London engineered liquidity at the low to the left-hand side. Okay, so let's keep an eye on this low over here. Now that we have ran it, okay, how can we be involved in a move back to the upside if it occurs? Well, if I wanted to take an entry, I would need to have some sort of liquidity block over here, okay, and I would have taken the buy here. My stop would go below here. Okay, so something like this. I would have taken the buy like this when we stabbed the low, and my stop would go, look at my crosshair, below that liquidity block, and I'll target liquidity to the upside. Simple stuff, okay? But unfortunately, we had no liquidity blocks to the left-hand side. Nothing clean, at least, maybe a little minor one, but nothing I would be taking just an entry off the low, okay? So I'll be needing to see some sort of entry model here as a confirmation for me to enter the market and target the liquidity we left to the upside, all right? And as you can see, 5-minute kind of had a liquidity block down here. Nothing super, super clean, but that's really it. And after that, moved higher, little pullback, and then just continuation to the highs. Look what happens here. Okay, respect the highs, no problem. Why is that important? Well, since we had a big sell-off from this area, we can expect the market to maybe just give us some false reactions, anticipate these kind of things, and just sells off for a little bit, and then ends up moving to the upside to grab, boom, coincidence. Okay, so I know a lot of you might have been looking for sells here, but since we've taken this low and returned back to this area and sold off, all that tells me is, boom, we've left liquidity, no problem. This was a no trade for us. Okay, we can buy into that. Cool. So what time is it now? Late New York. Okay, London close. We won't be trading anymore. Day's done. Let's head over to frame out what could be happening in the following day. Okay. Okay, perfect. So don't forget, we still are building liquidity at this high here. All right. And since, look at this high from Monday, we've sold off, building liquidity here as well. All right. So things to keep an eye on. We got a liquidity block down here. Okay. Is it possible that maybe we can respect this for a little bit? Sure, it is. Okay. Things that we can anticipate. All right. So Monday close here. Let's get along with the price action and kind of frame out what could be happening the following day. Let Asia print its price action. Maybe it'll give us a little more of a better bias here. Let me just mark out the time I usually hop on my computer for New York. Okay. Okay. A red box here because this is not an area we'll be trading from. Perfect. We'll approach. Cool. So what happened? Since we've taken out 1 and 2 yesterday, okay, and had a sell-off, we will not be buying from here, okay, because we've taken out these highs. That means if we do respect here, it's just trading with retail. So what does the market do? Ends up running this liquidity here. Perfect. Now what have we left at the highs from yesterday? Look how purposely Monday respected these highs for Tuesday to long into. So Tuesday, London, trap the buyers. Okay, anybody looking to buy from this red box here, this is a no-go. It's a low probability buy. They get trapped. Okay, then the market gives a reaction, comes back, mitigates the extreme liquidity block, and longs. Okay, oops. And where do we long into? Long into that liquidity we purposely left here. Now, how can we get involved in this? Because we're still trading below this wick to the left-hand side. Not only that, don't forget, remember, this whole time this was like a break of structure for retail, meaning all of this is going to end up being a trap. Okay, and look how we're starting to leave that liquidity to the upside. All right, so Tuesday approaching New York. If I was to take a sell here, I know there was no entry in these areas here. Okay, why is that? Well, look how the market came up. Sorry, when is this? This is London, yeah. So we came up, respected this high from the left, came down, printed a low, and then took out previous high, starting to build a little bit of structure here, right? High, low, high. Then we trade above this high from the left, gives us a reaction to the lows. Look how we build liquidity. So now we have that reasoning. This is not an area we'll be trading from for obvious reasons. This is trading with retail. Okay, now we have liquidity here. Why do we have liquidity here? Well, because we respected this red box and moved away, even induced higher again, right? Took out previous high. So this becomes a trap as well. Oops. Just like this. Perfect. Not an area we'll be buying from. So timing wise, nothing too pretty either. We're approaching New York, so let's see what happens here. We have essentially relative equals left down here. Okay. The market left liquidity over here early London. Okay, so let's see what happens. As of right now, there is no trade. Why? Because if I wanted to short this thing, I wanted to be shorting above this high at the least. So let's just say we get another long here, and then there's some sort of entry model delivered for us up here, maybe we can sell, okay, and target something over here. But that's how I'd be entering the market here. Everything else would be low probability at this current moment, okay? So we need to be patient and wait. So Tuesday, news comes out, big sell-off occurs, okay? Why is this, or sorry, actually, let's analyze what ended up happening. Yeah, we'll stay on the, actually, you know what, let's go to the 1. Because there's news, it's a little bit wicky on the 5. Look how we take out previous low, price returns back, respects this area here, okay? No trading for us. This now tells me, what do we have? Liquidity left above this high now, okay? And then a big news sell-off occurs, okay? Right into, I believe, let's move this over, grab this low, okay? Grabs this low here, but look how we just pinched below it, okay? That causes this bullish move back up. Now, we've left liquidity here, which is a possible buy opportunity, okay? But don't forget the bigger picture here. Let's go back to the 5 just so we can see the bigger picture a little more clearly. Let's get rid of this. Look at the engineered liquidity we're now leaving to the upside, okay? Not only that, we have all of these lows. We're starting to build liquidity at the lows as well. So now this is when it might get a little bit wonky, okay? You have liquidity lying on both sides of the market. We understand that all of this, any bearish reactions coming out of this area is going to be a trap, okay? So this is when, again, you want to be staying patient here. We've taken lows here, so it's given us a small term or a short term buy. Let's end up seeing what kind of price action we get delivered here. So check this out. The market takes out previous high. Oops. Okay, goes long, comes down, respects this low, gives us a false reaction, and then takes out the lows here. Okay, perfect. Now, possibly could see how buyers are trapped here on the lower time frames, and it could allow us to go long. Look how we respect the highs. Why do we respect the highs? Since we've taken out lows over here, retail is interested in selling from the red box. We get false reactions. There's liquidity above this high now. Okay. Market hunts for that. Since we grab that liquidity, look at the bearish move we're getting now. Okay. We're getting this bearish move because there was liquidity induced above this high. We run it and we get a pullback. What do we have here? Inducement low. Okay. And right below, liquidity block. So by the book, this could be a nice buy opportunity into these highs. Just don't forget, we're starting to leave liquidity at the highs, but we also have liquidity at the lows down here. All right. So let's see what happens. Take the inducement low. We get a nice reaction off the back of that liquidity block. We actually end up filling it all the way down here. Okay. Keep tracking. Look how we're now starting to look high, low, high, low. What does that now tell me? Liquidity below these lows. Okay. So liquidity starting to build below these lows. All right. Come back down. Look at that. Even respected the lows once more. Reaction up. Okay. Getting false reaction at the highs. Building more liquidity at the highs. Perfect. Let's move this over here. See what ends up happening. Okay. Now we've taken out the highs. We have, so again, sorry, we just took out these highs. So structurally speaking, retail is going to want to be buying these areas. Okay. We do not want to be getting involved in this. Why? You'll be trading with retail. Not only that, look at the liquidity we're starting to lead to the downside. This is a red flag right here. So how can we manage our position? Since we've taken out this high, okay, you are now currently floating, well, we were touched just about a 1 to 3, okay? You'd want to be rolling your stop at least below that low, okay? Minimizing that risk, okay? Because now we're starting to leave liquidity at the lows. We've taken out these lower time frame structural points, okay? So is it impossible for us to react, sell off from here, and leave liquidity at the highs, just like we've been doing? No, it's not. So these are things you have to anticipate and consider, okay? So be smart. Either take partials or manage that position. Because look what ends up happening. Boom. Okay? Ends up hunting for all of that liquidity we just left to the downside here. All right? And look how you can even just move this over, come down, screwed around for a little bit, and sold off. Okay. So let's mark on, let's go to the 5-minute. But look at this. So structurally speaking, we end up respecting this area again. So even more liquidity above here. All right. Coming into Wednesday now. So the midweek. Let's mark on the day close so we can stop in and around there. Zoom out to get a good idea of what's going on. So the market ends up on Tuesday hunting all of that buyer liquidity. All right. Boom. Let's go back one candle. Okay. Perfect. So big sell-off. Okay. Remember, any selling in and around this area, low probability. So this is again when patience occurs, because essentially Monday, Tuesday just engineered a shit ton of liquidity for us at the upside. So if you're patient, the only type of entries we could have been taking was maybe this buy here into some liquidity here, so more of an intraday. This buy here, okay, into this liquidity here. So again, intraday. These shorts, no go. I don't like these. Okay. Again, why? It's low probability. So let's look to the left-hand side over here. What do we got? Here is, structurally speaking, look, we got low, high, okay? Taking out previous highs, come down, print a low, all right? And then from this low, we move bullish, taking out previous high again. Ever since we took out this high, look at the amount of liquidity we've been building in this area, okay? For about a week, okay? So what can we do? Grab a horizontal ray or whatever you want to use. Grab that low, because that's where liquidity will be lying, right? So midweek is coming. As we've talked about it a couple times. Wednesday, typically, if we have a bullish bias on the higher time frames, if we have a bullish bias, listen to this carefully. If we have a bullish bias on the higher time frames, Wednesday will typically print the low of the week for us. Okay. On the flip side, if we have a bearish bias on the higher time frames, most of the time, Wednesday will print us the high of the week. Okay. So for in this example here, look at the bullish bias we have. Okay. Liquidity we've left at the highs. We're approaching Wednesday. Okay. Is it possible for Wednesday to print us that low of the week here? 100%. Okay. That's definitely a possibility that can occur. And then we can move higher from there. So let's see what occurs here. Again, let's mark out when I hop on the chart so we can kind of emulate what I think and see when I hop on. Okay. We end up taking that low here. Coincidence? Approaching the time I hop on the charts. Okay, cool. So this is when I typically like to hop on. What can I see? So I definitely have a bullish bias. Why? Higher time frame liquidity left. All right, we just respected this trap here, this retail trap. This is VOS. So all these areas, again, for the 10th time, engineer liquidity, it's gonna be traps. So it's respected all that, and it's left a reason for us to go long now, okay, into these highs. Cool. So I need to see what's going on. So I believe Wednesday was FOMC. So that's 2 p.m. And I believe on 2:30 was the conference. So let's mark that. And honestly, I think there was news at like, you know what, we can actually check. So Wednesday was here. So yeah, there was news 8:15, 9:45, 10 a.m. and then FOMC. So 8:15, 9:45, 10. 8:15, 9:45, 10. So zoom in here and see what's going on. We want to see price to the upside, okay? We have some internal liquidity here that can provide us some pullbacks when we run them, right? Why is there liquidity here? Again, we sell off, taking out previous low, price comes up again, respects resistance, respects smart money trap, fib, whatever it is, and then we move away. So there's liquidity above this high. Okay, so we'll grab that, move it over, no problem. And yeah, let's continue on with price action here. So approaching news in New York here. So news just announced. Nothing too crazy. We go long. We're approaching this high to the left, and we spike through it. Remember, I'm bullish, so I'm not really interested in selling. We also have news coming at 9:45 and 10 a.m. You kind of just want to be waiting for these news events, right? Am I going to be wanting to look for a trade in between 8:15 and 9:45? Probably not. Okay, I don't have control of my risk when these news events drop. So, like I usually say, is look for entries after news. In this example here, will I be looking for news after this or entries after this news? No, because next news is literally right around the corner. It's just one of those days where there's literally 4 news events in one day. So most of the time, we're going to be sitting on our hands on a day like this. Okay. Next news, 10 a.m. announces we spike even higher. Why is this important? Well, structurally speaking, look, we take out this high. Okay. Now, buyers are going to be looking to buy above this low. Okay. Let's get rid of these lines now so it clears the chart up a bit. Cool. Remember, if I'm bullish, I want to see price below this. Okay. At the least, because that now tells me that liquidity's been taken. Okay. We also have inducement from the left, so we can mark that. Cool. So now we see buyers trapped. Remember, FOMC. Now it's late New York. We're not going to be looking for any entries here. As we know, before news events, we typically like to leave liquidity to fuel that news move. Okay. And remember, if we're bullish on the higher time frames, we're predicting Wednesday to print the low of the week. There should be a move to the upside. Okay. And we're just using the lower time frames to kind of refine that for us. Now we're starting to run this low from the left hand side. Again, no entries right now. FOMC is about to drop. Okay, so check this out. From this high, let me move this over. From this high, price comes down, takes out previous low, okay, returns back to the high. Look how we respect it, move away, liquidity now above here. Boom. Okay, above this high. From here, we sell off, trap buyers. Anybody buying in this area gets trapped, okay? Not only that, look how we grab that liquidity from the left-hand side. From here, on a very small scale, look how we take a high out, go to print a low, and we move higher, and we've been building liquidity here, essentially for the last, since early New York, all right? Grab that low, look how we hunt that low, we get a reaction up. There's liquidity at this high, right? Any reactions are going to be false, and that's what happens. Look, the market just simply temporarily respects it, and we get a pullback, okay? What do we got down here? Liquidity block, okay? There's an imbalance here on the 5. Grab that whole area, pull it over. Now, FOMC is dropping. Let's be realistic here, okay? I don't know about you guys, but I'm not going to be taking entry right before FOMC. If I'm wrong on my bias and this thing drops, I'm not getting it slipped 4 times what I wanted to risk, okay? So we can draw it out and try and predict where price can go. But am I going to be taking an entry minutes before FOMC? Hell no. Hell no. So the market ends up coming into this 15-minute liquidity block after respecting the highs, and we get a move to the upside right at news drop. Okay, taking out this high here, now starting to run to these more areas, these internal areas we left purposely on Tuesday. So think about it. Tuesday leaves a bunch of liquidity for possibly FOMC to hunt. Okay, let's go to the 1 minute because it's getting wicky here. Okay. Look how we take out previous high. Anything above this low is a trap. And it gets kind of wicky again. Look, we take out previous high, come down, respect the low, go long, take out a high again, and then this big bearish candle comes down, respects this low. Let's see what happens. And moves away. Okay, so now, what are we thinking here? I'm going to put a black horizontal line here because look at all the liquidity we've now left here. And look at the liquidity block that we've left right below it. Okay? Think about this. On FOMC, we get a massive spike down and a move up, leaving this whole imbalance here. And now we've just built liquidity right above it. Ideally, this is going to be used now in the future. Okay? So now let's see where price is heading to right now. Tuesday left us a liquidity block at the high. Yes, there is liquidity lying above it, but as we like to know, as we know, these liquidity blocks areas temporarily get respected. Even if we're going bullish, we'll get respected just to build more liquidity here. Okay, and FOMC actually stabs right into that. Doesn't even use the amounts; it fills the whole candle just like that, and moves away. So, boom, even more liquidity here. We'll drag it all the way over now. Okay, look how many red lines we got now to the upside, all right? We got one that we just respected because of FOMC, this liquidity block. This wick to the left that we left from Friday last week, that Monday and Tuesday has been building liquidity. And then the more higher time frame area, boom. Okay, so now it's starting to make even more sense. Wednesday ended up printing that low, all right, before FOMC. This is in London, and we've gone bullish from there. So let's try and frame out what can happen now on Thursday, all right? Asia prints, London prints, okay? Let's drag this over. We do not want to be selling into here, okay? We are now building liquidity at the lows here in London. So let's mark this out. Turn this to, again, we can turn it to red because we've respected it, moved away. We've just respected this high too, moved away. Inducement low left here after taking it out, okay? Any reactions at the highs, trap. We're not selling there, no good. We've respected the low again here. Why is that important? Well, because this is a trap area. We do not want to be buying here. Okay, the market ends up inducing higher once more right at London Open, grabbing this high. Okay, where do you think price can head now? We got liquidity left here, and we got liquidity left here. Remember this black line. It's hard to see on the 15, so let's go to the 5. These are all the lows that we left just after FOMC. Okay, and at the end of FOMC, late New York on Wednesday, look how we respect the high, come down lower, and engineer even more liquidity at the lows here. Look at this now. All right, so let's keep an eye on that. I got the horizontal array at 106,797. So let's see what London does here on the following day. So we respect the low for a little bit temporarily, just to induce more liquidity. Now we start selling off. Okay, now we grab equals here. Okay, as of right now, is it possible for us to have a little long? Yes, but we have no liquidity to target right now. Okay, there's nothing at the highs. Okay, we've just sold off and never came back and never respected. So something like this could occur, sure, but nothing that I really want to be taking entries on right now. Let's see what the price action we get below these equals here. Okay, perfect. Okay, we want to see some sort of build up in the market. We want to see liquidity get engineered for us so we can build another bias for ourselves. Okay, what are we seeing here? Market took out a low. All right, returned back to this area, respected it. Okay, moved, and then now we're moving back to this area here. So let's see what happens. Are we going to build more liquidity? We do. And we actually respect it and move away. So now we have liquidity at the highs here. Let me mark on when I hop on. Okay, actually, so this is exactly when I hop on here. I believe this day we also had news. Let me double check. These are things you always want to be checking. Yeah, we did. So 8:30. So 8:30 is right here. Perfect. So liquidity left at the highs. We have liquidity down here, and we have a long, higher time frame bias. Okay, we're predicting New York to go long. All right, so we just need it to make sense first. Okay, we don't want to just because we took these lows out here doesn't mean we're just going to automatically fly back to the highs. Okay, we need that price action to build us that picture first, and that's what's happening right now. Keep following along. Okay, so news, just like the other day, what happens? Price action builds liquidity for news. News comes in, spikes the lows. Okay, anybody buying at this support level, smart money trap, whatever it is, they get liquidated. okay? They get trapped. What have we now left up here, right? Sellers got in this area, okay? So now we just taking out the buyers. It's quite obvious. What are we going to take out now? The sellers. Market hunts for the sellers. Perfect. So since we've taken them out, taken out these highs here, retail sees this as what? BOS, lots of momentum to the upside. Where's everybody going to be buying this thing now? Okay. Here. Think about it. Where would the next draw on liquidity be? Okay. Swept the buyers, swept the sellers. Just taking out these highs, which tells me BOS to the upside for retail. Maybe we can get some sort of sell off now. Okay. Come to the low. Buyers try and step in because this is going to be a trap. And then maybe they get liquidated. Okay. And since news, let me get rid of these drawings here. Since news here, news drop, respects this low from the left-hand side, boom, liquidity below this low now. Okay. So let's go back on the 5-minute because there's no more news. So we should be able to see some clean PA on the 5. Okay, wow. So grab the liquidity at the highs, come to the lows, respect it for a little bit, and now we're starting to trade below them. Okay. And this was a trap. Okay, look what happens here. On a very small scale, you got high, low, high, respects this, left us liquidity. Let me get rid of this. Boom, liquidity above that high now. Okay, we've now grabbed this low, but don't forget, what did this low respect? All of this. All liquidity here. Okay, stay patient because sure, we could get a pullback, but this is not the long we want to be taking because it's most likely going to be short term. We haven't cleared all that liquidity. We want to be entering the market when the liquidity has been taken. Okay, when all the buyers have been liquidated, because that's when the move will actually occur. Boom. Buyers now trapped. Okay, that liquidity we left post FOMC has now been used for Thursday. Okay, and on the 1-minute, same thing occurs. Look at this. Low, high, low, taking out previous low. This is an area retail is going to be selling from. Okay, it respects it and moves away. Liquidity above this high. Okay, and then we take out that last liquidity point, trading this massive imbalance. We have a liquidity block here. We're going to 15. Check this out. You can see this is a nice liquidity block on the 15-minute here. Boom. This is screaming buy. Stop below. Okay, and where can we target? All right, so let's discuss targets here. You have that 1-minute area down here. We definitely want to see price running that. Just to there is we're looking at just like a 1 to 1.5. So there's no point to take partials there. Okay. Here, this is areas you want to maybe start managing your position or taking partials. Okay. And then you have the highs from previous days. Okay. So remember this FOMC, we went long, printing that low of the week. Then we went long in FOMC, respecting this trap to the left. Okay. So this is an area you definitely want to be looking to take partials from. Okay, and if you keep zooming out, remember this wick. This was all engineered liquidity. Monday and Tuesday engineered a bunch of liquidity for the market to possibly hunt later in the week. Okay, so you have, what we can do is we can change these to raise. So it'll be like for targets. So one here, and then just go black to make this easier. Okay, so with this, these are all areas of targets now. So all the raise, we have 107.355 has liquidity above it, 107.418 has liquidity, and then finally 107.566. Okay, so we can just for safety measures, we don't need to hold it all the way up here. We can hold it to this high. Okay, if you're more comfortable, that maybe you want to take 50% off here, that's fine. As you grow in experience, get more experience, you'll be able to hold more volume to these areas. But this is definitely an area you want to be looking at for sure. Okay, so let's let's get going with this. All right, so respect the highs, induce sellers. Now we're starting to move a little bit to the upside. Grab this liquidity here. We have a liquidity block here. Okay, is it possible for us to get a pullback? Sure, it's possible. Is it going to happen? I can't tell you that. I know I won't be shorting it, but it's possible. Okay, and look at that, we don't. So even better. We take out this high. Now we're coming up to this liquidity block up here. Is it possible for us to respect it and have another pullback? Sure it is, but it doesn't. Blows right through it again, no problem. Even better for us. So now we're approaching late New York. A couple hours after London close, we have the day close is right approximately here. So there it is. Look how the market just leaves liquidity in the previous days just for price action to take out later on. Now, Friday, tomorrow, we have NFP. NFP's 8:30, right? Half past. Yeah, 8:30 right here. Okay, so now what do we know about news events? The market tends to leave liquidity for news, okay, to fuel that news move. Perfect. Let's try and frame out what's going to happen. So we'll print Asia price action in London and hop on for New York. Okay, so Asia ends up going long, taking out our first target here. Perfect. Nice stuff. And then London comes down, spikes, respects the lows, and goes long. We got liquidity below these lows now. Okay, taking out this wick from the left as well. Now we're approaching NFP. Okay, so things that can happen. We've left liquidity here. Okay, now we've taken out this wick. Okay, could this occur? For sure, it's a possibility. So you definitely want to be. If you're still in this buy position, you're going to want to at least partial. Okay, if you didn't partial here yet, I hope you would have partialed here at least, because this is like a 1 to 7 or something. But you partial here, maybe partial again up here. Why? Because just in case we get like a 40-50 spike down here to clear this internal and then go long, it might be annoying to see that. Okay, so take your partial, NFP drops, and boom. We know we actually just leave liquidity here and just friggin' 60 pip spike up in a couple minutes, grabbing all of this liquidity from the left-hand side. So it was a wild week. I just wanted to not even just to show you just all the trades. I just wanted to go dive in deep into and rant about liquidity, try to build a better understanding for you guys. But yeah, I've covered everything I want to cover. This might be a more longer video, but I hope you guys enjoyed. Yeah, we'll talk soon.